If you look at money growth from one year to the next, I think it was negative for about 15 months, maybe longer. The amount of money is a leading sign of inflation. We also think that inflation will go down a lot more than people think it will. I don't think it will go down, especially if the customer is scared about losing their job because of AI and automation in general or something else. That's why people tend to save more during those times. We think that will mean businesses will have to set their prices even lower. Wood makes a key difference between deflation that is harmful and deflation that is caused by new technologies. Deflation is usually seen as a bad thing for the economy, but Wood says that when it's caused by new ideas, it can be a good thing. For example, the prices of electric cars are going down not because fewer people want them, but because technology is getting better. Deflation of this kind lowers the prices of goods for consumers while keeping profit margins the same. Wood thinks this will happen in many businesses. She also talks about how productive people have been, which is better than predicted. This has made it possible for businesses to lower their prices without losing money, especially in fields that can benefit from robotics and AI. Wood says this trend might keep going all year as more businesses use AI and technology to make their work easier. Take a moment to like this video, subscribe to the channel, and set your alerts to receive more videos like this. You can also watch our other videos about cryptocurrencies and digital assets in general. Please share your thoughts and comments in the part below. For the channel's growth, everything you do is very helpful for the YouTube system. Thanks and have fun with the movie. Seeing how the economy has changed over time has been very interesting. Up until this report, changes to the job numbers had been down and much weaker than what had been thought at first. When we look at earnings reports and see how much money they made, we see that a lot of companies had negative sales. So, the big numbers have been changed recently by things like government spending, which is shown by the fact that personal income has gone up in some cases. Dividends are interesting, but not if you look at the economy. The part of the economy that goes through cycles is sick. It's bad. No matter what the big numbers say, it's clear that each part of the economy has been going into a decline. When the Fed started raising rates, housing prices dropped right away. We're still down 20 to 40%, which is called a recession. Non-residential is what you have. During a recession, building of cars is very weak. There are those sectors, and then there are the small and medium-sized business sectors. In 2008 and 2009, they had a lot of trust, and we've had some price changes, especially cyclical ones, that have actually made prices go down. Something that I do think is helpful is that prices are going down, which means that people are getting better deals and spending more. That seems like it would last. A lot of people say that inflation is caused by real growth. Price cuts have usually led to more business both in this case and in the past. Today was a good sign for consumers because it showed that the job market is still strong. As long as the job market stays strong and stores like Walmart, Costco, and automakers either offer bigger discounts or lower prices, I think activity will come and the job market will keep strong. But if they try to raise prices again, it was interesting to see FedEx say they're going to use prices to make up for the fact that they had positive revenues one year and negative revenues the next. That's not going to work, I think. And I think that a lot of people will understand how negative the economy is over the next year. It's not always bad when prices drop. This is because of innovation, especially innovation made possible by technology. The prices of cars and electric vehicles are going down, which means they're also getting cheaper. I believe there is a lot of confusion because productivity is higher than expected, which allows businesses to lower costs and keep their profit margins. If that lasts, that's great. We'll have to push it back this year because companies raised prices to make up for slower unit growth, which caused inflation to rise. In the 3.5 to 4% area, it rose. It's now broken below 3. And we hear that more and more businesses are trying to get people's attention by offering cheaper prices. Okay then. In terms of year-over-year growth, money has been going down for about a year and a half or maybe even longer. The amount of money is a leading sign of inflation. We also think that inflation will go down a lot more than people think it will. It wouldn't surprise me if it went down. Even more so if the customer is scared about losing their job, whether it's because of AI and automation in general or something else. That's why people tend to save more during those times. And because of that, we think businesses will have to set their prices even more low. We could see it when the unemployment number was over 5%. It was clear to us. I will say that today made me think about this productivity dynamic and how some companies might not want to let go of workers if they are making them more productive. In order to keep people buying, they can drop prices. Wood thinks that the software industry will change a lot. Instead of using standard software as a service models, companies will move towards platform as a service and infrastructure as a service models. AI is becoming more popular, which will cause this shift. AI will let companies tailor software solutions to their specific needs instead of depending on SaaS solutions that work for everyone. Companies like Palantir, which makes AI-powered software that can be customized, are in a good situation to get a piece of this market. We're all about coming up with new ideas. And this past year, something very important took place. We were worried that too much control was keeping new ideas from coming to the US, especially when it came to crypto or digital assets. We had an inspector who was very hostile. Also, I think the FTC is wrong when it says no to mergers and acquisitions. This is because it has stopped many new businesses from selling to bigger ones during times of liquidity. There's a lot of talk from both candidates about how those two jobs are at risk, which may be why we're seeing more agreement that new ideas are good, because they solve problems. In that light, I'm glad to see the progress here from both parties. When it comes to new ideas, we'll always choose less government control. I do not believe that taxes are at all good for new ideas or the economy. That's why both sides will make us think. But what's most important is what stops people from coming up with new ideas. We think we're getting a better idea of what will happen at the CC and the FTC. Well, we've been studying AI for 10 years now. That's why we bought NVIDIA so early. As you can see, we've taken it down in most of our categories except for the flagship. The next big play is something we've been looking for. We still think NVIDIA is a good stock, but we think the unexpected will happen in the software layers. You already know that Palantir has a big spot in the top 10 for us. Plus UiPath, it tripped up a bit, but it's back now. And I believe that more and more people are realizing how well placed it is. It's going to do great. Private software companies, on the other hand, are likely to be the ones who gain the most. I'm also excited that we have a venture fund whose goal is to make venture capital more accessible so that anyone can get $500 and invest in OpenAI, which is the third largest company, or SpaceX, which is the largest company. When it comes to software, though, a lot of people say, well, there are so many software companies out there. What do you mean? That means we think the software world will change pretty a lot, and software as a service will give way to platform as a service, maybe even taking a share of the market. In this case, think about foundation models and Palantir. A cloud is a type of technology as a service. That's because OpenAI, Anthropic, say Google, and Meta's Llama 3 will make engineers and developers so much more efficient. Instead of just switching to software as a service that works for everyone, businesses will start customizing their own software. Cathie Wood gives a complex and knowledgeable view of the current economic situation.